In this video, I want to go over Nasdaq volatility adjustments. There are two ways to make adjustments. This is tick pullback. One of our systems in our new micro NQ20 portfolio could also be traded with an E-mini Nasdaq with a much larger account. Either way, this uses a 15-point stop loss, way too tight for this type of market. Let's look at the back test report and then two potential solutions to adjust to higher volatility. So while this ended the week on a strong note, you can see how it got slammed at the end of the week last week. There are two ways we can adjust for volatility in this type of market. We can use a volatility filter. We can use a bigger stop loss. And I'm going to show you how we use this volatility filter in this strategy. And this is the conservative approach. There's a conservative approach and an aggressive approach. And we're going to show you which one is better in the portfolio setup. And intuitively, you would think it would be the conservative approach, but I'm going to tell you in advance, it is the aggressive approach that works better in the portfolio. And this is how we can view that. If you take a look at the portfolio calculator, I've added these two strategies in this list. And here is the current micro 20 NQ portfolio. It's 2865 total profit over drawdown. Max drawdown since mid-2016 is about 4,045, trading one micro on 20 different strategies. Current drawdown showing 1124, and then you can go back to, you can go down here and you can take a look at these strategies. Tick, pullback, NQB, and then you can take a look at the two strategies that I've added right here. I've added the conservative 2022 version and aggressive. The conservative uses a filter. The aggressive simply just changes the stop loss from $300 to $2,000 or from 30 to 200. So if you're trading the micros, you want to trade this, we're going to update the portfolio to trade this aggressive setup, and we're changing the stop loss from 30 to 200 on the micro or 300 to 2,000 on the E-mini. And this would require an ELD update, but it's not. It does not make the strategy better in the portfolio, but it is better. This strategy is better with the total profit over drawdown. But what it does do is it misses some big winners. And so you still need big winners. You still need aggressive approaches. This overall is an aggressive strategy. So if you have diversity by using an aggressive strategy, you can't all of a sudden make it conservative and expect to get the same diversity. So let's look at the portfolio 4 different ways without the current strategy. Let's look at it with the current strategy, without it, and with the other two options. 2865 with it. Now when we remove this, it goes down to, you have a worse max drawdown. You get a 2582. When you add the conservative version, and I'm going to show you the TradeStation results for each of those. With the conservative version, you are at 2667. So it's worse than the current version, and your drawdown goes up much higher. Let's go back. I think I put in a 1 instead of a 0.1. We're using 0.1 because we're talking about 1 micro. Everything's 0.1, so it has to go to scale. So if you look at it, it is 45.16 max drawdown and 25.93, so not as good with the conservative version because, like I said, you can't replace an aggressive strategy in a diverse portfolio with a conservative. You overcorrect. And so let's take out the conservative and put in the aggressive, and you'll see the improvement here by just increasing the stop loss by a dollar amount. The drawdown goes down, the current drawdown is lower, and so this goes up from about 2,800 to 3,100. So I like this setup. Let's take a look at the results now in these two setups, and I have it right here. This is the conservative, and the conservative in the short term looks like this. Well, actually looks like this. Conservative looks like this. The aggressive looks like this in the short term. I'm going to show you some further historical back tests to provide some more clarity. So here it is with the $2,000 stop loss and no volatility filter. You see what it did during the pandemic, and what it does overall. It's a better equity curve than the original equity curve. The average trade profit gets boosted by quite a bit. I think the old one is 49. It goes up to 152, 16,460 drawdown. And here is the equity curve. Once again, now let's look at the conservative. So here's the conservative version. This net profit as a percentage of drawdown goes way up. Average trade profit is high, 109. Here is the equity curve, but it misses a lot of big trades that are needed in this setup. And so it's contrarian to think that this strategy does not work as good as this strategy, but this strategy has an extra filter in it. And this one, the strategy on the right, is more aggressive. It is more raw. And so in a diverse portfolio, you cannot have strategy with too many rules, too many filters. And so we're updating the portfolio to use the micro version of this. So divide by 10 on this. So the drawdown on this strategy is 1646, not 16,460. And in a portfolio with diversity, it's the combined drawdown that matters. And so wanted to share that with you. Aggressive versus conservative approaches. Which one works better in a portfolio environment? Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.